What is the very best, most tax-advantaged account you can use to save into? Usually the debate centers around IRAs, traditional IRAs, versus a Roth IRA. But the most advantaged account is actually a health savings account, or an HSA. So let's break down what makes this such a great account for you to save into. My name is Scott Caulfield. I'm a CPA and a CFA charter holder and the founder of Sophos Wealth Management. So HSAs are often called triple tax advantaged accounts. They basically combine the best features of a traditional IRA with the best advantages of a Roth IRA. So the traditional IRA components, when you contribute into a health savings account, you get a deduction from your taxable income. So let's say you had income of $100,000, you contribute $5,000 into an HSA. Instead of being taxed on $100,000, you get a $5,000 deduction, so you'd be taxed on $95,000. So you get that immediate pre-tax contribution. That is an advantage today, right up front. That's great. Secondly, all the growth that occurs in an HSA will occur tax-free. So any interest, any dividends, this account can be invested just like your IRA money. And as it grows over time, you are not going to be paying tax on that growth along the way. So in that sense, it works much like a traditional IRA. But it can also have the feature of a Roth IRA, where any withdrawals you take and that go towards qualified medical expenses, and there's the caveat, any withdrawals for qualified medical expenses are also tax-free. So you get a deduction up front, you pay no tax on growth, and you don't pay any taxes when you take the money out for qualified medical expenses. Now, what if somehow you were able to build this account into a very significant amount of money, more than you would spend on those future medical expenses? This is actually another great thing. It essentially reverts to like an IRA type account where you will pay tax on your withdrawals, but it's just taxed as ordinary, as an ordinary income, like ordinary withdrawal. So in that sense, you lose the Roth IRA type deductions, but it essentially has the same tax advantages in that case as a traditional IRA. And if it's done in retirement, there's going to be no penalties there. So some other things to look at or think about with this. So to contribute to an HSA, you do need to be enrolled in a high deductible health plan. I've done a video prior that basically shows the average person is better off with a high deductible health plan than they are with a more traditional PPO type plan. Essentially, that's because you pay much less in your monthly premiums, and the average person's annual health spending is low enough that what you save in premiums makes that a better option. Additionally, many employers are going to contribute somewhere between $1,000 to $5,000 on your behalf into the HSA. Obviously, this is going to depend on your specific employer, but that is another huge bonus that makes these plans more attractive. Now, an obvious caveat here, it's going to really depend on your specific employer, their health plan, your health needs for you, your family. Are you a high user of the health system, low user of the health system? So there will be a lot of variability. But on average, a typical person is better with the HSA or a high deductible health plan with the HSA attached, and then you can use that as an amazing savings vehicle. Another thing I do want to point out is HSAs have quite a bit of flexibility too. So you might be familiar with an FSA, a flexible savings account. That's where you put pre-tax money into an account that has to be used for qualified expenses during that year. And often childcare is one that's used there, but it can be medical expenses too. That is use it or lose it money though. You have to spend it that year. HSA is not that way. Money you put in there can grow. If you leave your employer, you can take that money with you. It can be at a bank, kind of like taking a 401k, put it in a rollover. So these are just fantastic accounts, whether you're saving them for medical expenses or whether you think that maybe you'll save in excess of those and use it as a retirement account. This is probably one of the first accounts that you should fund as you look at your different retirement and savings options. I appreciate it if you'd like this video, subscribe to my channel. Check out my website if you have any other questions or want to learn more, and appreciate you tuning in today. Thanks.